In today's video, I'm going to break down exactly how to build any trading account with less than $5,000. I've put together a full guide, including my strategy, my risk management, how to position size, and everything that you need to know to build a trading account with less than $5,000 and to set a foundation to profitably trade for years. And I want to say before we get started, if you're looking to get rich quick or for a secret strategy, this video is not for you. I trade on principle, I trade on R multiple, and I trade on proven strategy that over time has made me money, but is by no means get rich quick. Trading is hard, it is tough, it requires a ton of self-discipline, grit and grind, years to master, but over 8 years of trading experience, I've gotten it down to a science that works for me, my system works for me, it's worked for over 60,000 of my students, and now hopefully I can teach you something today that puts you one step closer to profitability the right way. Now, before we go over our agenda for today's video, there's something I'd like to show you. This is my profit for this week, $4,467. This is from Monday, July 15th to today, July 18th. This is a typical week for me. Now, I'm not gonna sit here and say, I'm Mr. $10,000 a day. I'm Mr. $100,000 a day. I've had those days, my biggest being $88,800 last year, but that is not typical for me. I like to trade as stress-free as possible. If I can average $1,000 a day, that is a massive win for me. Doing that is over $250,000 a year, and that is what I strive to do, and that is what I strive to teach. So when I'm teaching you these strategies to build a small account, just know, yes, we all want the big days, I understand, but don't get caught up in social media and these gurus selling you that you're gonna be the next 30,000 a day trader. Most of us who make consistent money trading, who have been doing this for years, aim for consistent, stress-free days that they can trade with the system and repeat over time. That is what I do, and in today's video, as you'll see a bit later, I'm gonna show you the strategy, the exact system that I used to make some of these trades, and some other recaps from previous trades I've taken and how I use my system so that you can implement it too. Now, for today's agenda and curriculum, I want to first start out with going over some rules to building a small account. Having a strict set of rules that we follow, abide by, and stay consistent with is critical to not just making, but keeping money as a trader. I then want to give you a roadmap for the next 6 months. It is currently July, so whether you're seeing this in August, September, October, no matter what month you are seeing this in, it is applicable to giving you a 6-month plan to completely changing your trading around. After that, I want to go over how you size each trade. Now, mind you, what I'm about to teach you is applicable to option trading. That's my main emphasis in this guide. To futures trading, to equity trading, and even to some extent to crypto trading. I want to go over how to size each trade and the importance of size. Fourth, I want to go over what my strategy is based on. The same strategy that made me almost $5,000 this week, $842,000 last year, and over $2 million over time. 5, I'm going to give you exactly which stocks to trade and how you can decide those best for yourself. 6, I have a very important list of what not to do as a trader and how to stop losing money. 7, I want to go over my own journey and how I turned $5,000 into over $100,000 back in the day. And number 8, I want to go over a few examples and some charts to show you my strategy and my system to help you implement it and change your trading too. So, step 1, let's start off with some expectations. You are not looking to get rich quick off a small account. That's the reality. There's so many gurus that run small account challenges or try to sucker you into building $1,000 into $1 million. That is not me. I'm going to give you the realistic expectations and what it really takes to build a small account from someone who has actually done it. I want to emphasize that we have to be pickier with our entries. We have to have a sniper style mentality. As a small account, you don't have the leeway that you do with a $25,000 or a $50,000 or a $100,000 account, which by the way, I hope you guys all get to. That's the point of us being here together, is to build you to that point. But while you are a small account, you have to be pickier. We have to abide by our rule of A+ setups only. Think if you're trading like blackjack, all right? If you could see your cards beforehand, you would double down on 18s, 19s, 20s, and 21s. You wouldn't double down on a 12. So for our trading, we have to think about it the same way. We put on risk when we have an A+ setup, say an 18, 19, 20, 21 in blackjack, but we stay away from risk when we have a bad setup, or say a 12 in blackjack. And finally, it's important to remember a few stocks will create a large amount of your wins, and you need to be trading on a cash account. We want to avoid the PDT rule, where you can only take 3-day trades in a 5-day period, by having a cash account. And with that, only sticking to trading a few stocks. Now, as far as a few small account building rules go, this is a great place to start. Number one, start with less than $5,000, even if you have more. I imagine some of you have $10,000, $20,000, $30,000 to start trading with, and I'm here to tell you I don't want you using all that. The value that you're going to get in this video is applicable if you have $5,000 to your name, $2,000 to your name, or $200,000 to your name. Doesn't change the facts that you should start with less than $5,000 even if you have it, because there is a very high probability that while you are learning, you're going to lose money. That's the reality of trading. Number two, stick to a basket of 3 to 5 stocks. I will cover the best ones to trade later on based on your situation. 3, establish a simple system you will be trading with and guidelines to enter each trade. I will be showing you how I personally use my system, how I enter trades, what I look for, and the exact process that I use. 4, create your daily, weekly, and monthly plan for trading and account growth success. I'll show you exactly how I create mine in just a bit. And 5, apply 3 important psychology tips to your trading to boost your confidence and increase your success rate. Now, this is a very broad number 5, but a few things that I recommend are A, keep your promises to yourself in your daily life. Make it a point that if you promise yourself you're going to do something, you do it. 2, you fully focus on the discipline in your body. You hit the gym every day. You exercise every day. Because if you can't discipline your body, it's going to be very tough for you to discipline your mind and discipline your trading. See, how you do one thing is how you do everything. And especially in building a small account, you have to be a very, very disciplined person. So discipline the body to discipline the mind to discipline your trading. And 3, I challenge you with this psychological tip to get a notepad, to get some sticky notes, and write 3 things that you struggle with. And after you write those 3 things that you struggle with, stick them to the front of your monitor. So you have to face them every single day. Now, you may have other things that you want to work on that could be a part of your 3 important psychological tips, and that's fine. But I challenge you after this video ends and before your night ends to get those written down and to start executing immediately. Now, for our trading roadmap, this is a step-by-step trading plan to build a less than $5,000 account and win 2025 or the coming year. Now, if you're seeing this in 2025, it could be to win 2026 or to win the second half of 2025. But we're always looking to win the future. That's what a lot of trading is. It's building a foundation, building a system, checking in on the system, going brick by brick on the way up, and then repeating over and over. So to break this down a little further, right now it's July. I want you guys focusing on building a foundation. No matter what month it is that you're seeing this, I want you building and focusing on having a solid foundation. Next, after at least a month or 2 of foundation building, I want you to start system testing. Now, system testing is typically done with a very small size. I'm talking 1 contract or 1 share. It can also be referred to as the trial and error phase. Now, as a trader, the trial and error really never ends as you stay a student of the game, but you're really diving into trial and error when you're system testing. You're finding out what works for you, what doesn't work for you. You're journaling, keeping the good in, and kicking the bad out. So I want you system testing for at least 2 months. After that, we find what works, we find what does not work, and we go into system application. Okay, this is where you start applying your system. You start slowly, month by month, putting a little more risk on, and you really start dialing in what's working for you and building off that. Next is our 6-month checkup. At the 6-month mark, I want you completely dissecting, more than you do at the beginning of each month, how your trading's going, how the last 6 months have been, and how to not only keep that momentum going, but how to win the following 6 months. The 6-month checkup is key. Staying accountable is key for anyone looking to build a system and consistently make money. Next is the brick by brick model. After you have your system, you've done your application, you've done your checkup, you know what it takes to keep moving forward or what you need to cut out, then we build brick by brick onto our system and keep furthering our trading knowledge. You have to keep building up and you have to keep moving forward. If you slip in your risk management, if you slip in your system, if you slip in your day-to-day process, it is critical that you keep building afterwards and don't let yourself keep slipping. And finally, after all this is said and done, okay, we keep the repetition phase going. We rinse, repeat, and do this over and over. A lot of trading and a lot of trading success comes from repeating and consistency. We have to stay consistent with what we're doing, how we're executing, our risk management, and our process to becoming the trader that we want to become. I cannot stress this enough. The best traders I know all stick to a system. They all have a personalized system built to their liking and to their capability, and they execute that over and over again flawlessly. Yes, there will be losses. As traders, our job is to be the best loser. But with your system dialed in, your wins will become bigger, your losses will become less and less frequent, and that is how you make money consistently as a trader. Now, as far as position sizing goes, this is the Team Bull Trading Guide to building any account with less than $10,000. This is mainly focused on options trading. However, you can take these same principles and risk management factors and apply them to anything you are trading. For an $1,000 account, we want to have a max position size of $200, a max stop loss of $80 to $100, at the money strikes with a 50 cent to $1 contract price. Now you'll notice that the math on the $1,000 account and the percentages are a bit higher than the rest of these. This is because as you are building an account as small as $1,000, you're going to have a bit more risk on. I would prefer that you never risk more than 2 to 5% of your account on any trade, but with an $1,000 account, we put that up to 8 to 10%. And the reason for that is if you want to build such a small account, you're going to have a bit more risk and have a bit bigger wins, which is going to require a tad bit more risk on the downside. $2,000 account. We want a max position size of $400, a max stop loss of $100 to $150 at the money strikes with $1 to $1.50 contract price or anything below that. Okay, $100 to $150 per contract. A $5,000 account. We want a max position size of $1,000 with a $250 to $300 stop loss, max loss, weekly or at the money strikes with $1 to $2.50 contract price. So max contracts of $250 a piece. And finally, when you get to that $10,000 account, we want a max position size of $2,000 with a $500 to $600 stop loss, weekly to at the money strikes, and $1 to $300 a contract option price, meaning $300 absolute max of any option contract you are buying. And I can't stress it enough. This chart right here is critical for anyone looking to learn to trade options. However, if you're trading futures, if you're trading crypto or equity, you can use these same risk management parameters and how you manage your risk in your small account and apply it to those instruments. What's most important here is having your risk defined and allowing yourself to lose trades but still stay in the game. So, what is my strategy? I'm going to show you that on the charts in just a few minutes, but first I want to go over it in words. I use supply and demand. This is used to identify your zones. It's used to tell you when to and when not to trade. And it's also used to better your chances of winning and finding bigger moves. As traders, we always want to find the bigger moves. That is how we make money and size out our losses. I use support and resistance. This is used to identify key levels. It gives us a better idea of when to and when not to trade more than just zones, but specific levels. And it's critical to know that traders make 6, 7, and 8-figure salaries simply knowing how to trade support and resistance, and I'm one of them. I mainly trade price action. I trade some ICT stuff, though I've never watched an ICT video. I refer to them as areas of confluence and impulse candles. We'll go over that later. I watch volume. It's as simple as that. Price action. This is the pillar to your trading success. This will allow you to read what the market is telling you in real time and have a better understanding where price is heading. Finally, it's the art of learning to interpret and execute on candlesticks and volume, and that is it. We don't need indicators. We don't need algos. We watch candlesticks, volume, and that is how we find our trades. Finally, consistency. This is the biggest part of my strategy and my edge, arguably. This part isn't talked about enough. I stay consistent in my daily habits, my discipline, and my focus. I'm at the gym every single day. I'm eating the same healthy diet every single day. I have the same pre-market routine every single day. I do these things in my daily life and in my trading every single day that allow me to stay a consistently profitable trader. You can have the best strategy, but if you are not disciplined and consistent, it won't matter. You won't keep your money. You will end up blowing it all. I've seen it happen to too many people. We have to stay humble. We have to stay disciplined. We have to stay consistent. We have to stay a student of the game. And if you do all of those things, there's a very high probability that you will end up finding success. So, which stocks should I trade? A few that are small account friendly are SPY, QQQ, Apple, AMD, Amazon, and anything with liquid contracts less than $3 a piece or $300. A few that are not small account friendly are Tesla, Nvidia, Netflix, or anything with illiquid contracts more than $300 a piece. It is critical to know which stocks to trade and which not to trade in finding your success and building a small account. Because putting on too much risk or trading stocks with too much spread or that have too much volatility can be very detrimental when you're trying to find a consistent strategy or to make and keep consistent money. Now, for futures traders, I typically recommend MES or MNQ. It's the smaller version of NQ and ES. It will allow you to trade with less money and to manage your risk more accordingly. And if you're still here, make sure if you guys haven't already, you tap in, hit that subscribe button. I have weekly videos coming to you on real education with real results and no BS. I've been trading for 8 years. I've been a student of this game for 8 years, and I love sharing my knowledge with you guys and helping you guys learn the right way. And here we are now, my friends, the list of what not to do. And I have a quote in here that I use almost daily with my team inside Team Bull Trading. Discipline over dopamine. As traders, I want you guys to focus every single day on choosing discipline over dopamine. This comes in all ways, shapes, and forms of life, but is especially important in trading. Rule number 1 is never average down. Unless it's a part of the plan beforehand, we never average down to make our losers cheaper. It only ends in bigger losses over time. Never boredom trade. We are here to make money. We are not here to have fun. And too many traders get bored and want to feel dopamine. They want to feel excitement, so they put on trades and lose money. Never revenge trade. You've got to become a good loser. A lot of this stems from ego. You have to understand that losing is a part of the game, and as traders, I want you guys to become really good at it. Really good at having less losers and really good at having manageable losers. Never embrace a gambling mindset. If you come into the gambling mindset, you are going to lose eventually. We saw that very often with the AMC and GameStop saga. People made a lot of money gambling, and what ended up happening? They ended up losing nearly all of it. Never feel like you have to trade every day. You are a day trader, not a trade every dayer. You find A+ setups, you find where you have an edge and risk, and you execute. If that happens twice a week, great. If it happens once a week, great. If it happens 5 times a week, great too. We trade where we have probabilities, and that is it. Never go a day without journaling. A lot of people have been trading for 1, 2, 3, 4 years, but how many of the days during those years have you committed to a week or two straight of journaling? A month straight of journaling? If you want progress, you have to have accountability. And if you don't have accountability, there's no way you are going to make consistent process. It's simply just not possible. Never go a day without a game plan. This is something I pride myself on. Every morning on Instagram Live, for the last 2 years, I am live on IG at JDunTrades. I give my full game plan, and I make this part of my daily routine every single day with nearly 3,000 plus other traders. My page has 193,000 followers at this time, likely to keep growing because of the value we provide. But the whole point of saying this is that I have the same routine every single day. I make my game plan, I follow my levels, and I follow those levels to a T, where if they hit, I take a trade. If they don't hit, I typically don't take a trade. And I work almost like a robot in that sense, where I do the same thing every day. I come in prepared every single day, and it's shown year after year with results. Finally, never enter a trade without at least 2 confirmations. If I don't have 2 confirmations, I'm not going to trade. This could be two different time frames, whether it's the 1 minute and the 5 minute. It could be volume in one time frame. It could be an hourly level mixed with volume, whatever it may be. I need two confirmations to enter the trade and to give me an edge in said trade. Now, all this goes hand in hand with my journey where I went from starting with $5,000 to making over $100,000 plus years ago. In the next few slides, I want to break down several key rules, strategy tips, and parameters that help me scale after losing over and over. Then I will break down exactly what I like to see with my strategy and how I define risk in every trade that I take on the chart. So stick with me. I'm going to show you my exact strategy at the end of this video on the charts and everything I look for, but all this other information is critical to your trading success over time, and I share it with you for a reason, to help you. To start, a few musts to enter our trade to help me scale 5K to 100. We must have seen the setup work before, at least 10 times, and honestly you can bump this up to 50. Now even after today's video and I show you my ideal setups, you're going to have to see these setups play out over and over to get confidence in them yourself. You'll know what to look for, but you won't have confidence in something until you've seen it work out over and over and over again. That's where experience really comes into play. We must have at least two confirmations, non-negotiable. We must have confirming volume. Debatable, but for me it's a must. I have to have volume when I'm trading. One of my mentors, Anna Cooling, the author of Volume Price Analysis, she spoke inside Team Bull twice, preaches this. It's the basis of my strategy. I trade with volume and I trade price action, and that is it. We must either A, have the bigger time frame level, or B, have another confirmation intraday. We must know our opening print level and previous close, both critical levels for me to know each trading day, and we must know our stop loss, either money or level, before the trade happens. And I'm going to show you exactly how I identify that once we get to the charts. 2, earn your size. Yes, size matters. Every month, I want you to evaluate and track progress if you have earned more size in your trades. And second, I want you to practice the inchworm. Now, we're going to get to the inchworm in just a moment, but to start with evaluating and tracking progress. On the first of every month, this is a great rule of thumb to follow. I want you guys looking at your previous month's journals and your accountability, seeing if you're profitable and how was your emotion throughout the month. If you find that you were low on emotion, you had good trades, you're profitable, things are going well, bump your size up by one contract or one share. Spend the next month on that increased size, but don't increase until the month after that. At the start of the next month, if you're like, hey, I felt a little more emotion, I didn't make much more money, you bump it back down. And you slowly crawl your way up in size doing that. Now, your growth as far as money goes is going to be much slower, but you're also going to do one critical thing, and that is staying alive. I want you guys to live to trade another day, and the best way to do that is to slowly build your system and to live on and get more experience. Because the more experience you get, the better you're going to become. The better you become, the less money you're going to lose. The less money you lose, the more money you're going to make. But if you blow up too fast, you're never going to have the chance to make that money. So slowly size up. That is the key. And second, I want you to practice the inchworm. Now, the inchworm is a concept that I got from Jared Tendler. He's the author of The Mental Game of Trading. Now, full disclosure, I make nothing from telling you that. He is a good friend of mine. He teaches in Team Bull every other week. He's our trading psychology coach. But the reason I hired him to be in Team Bull and be our psychology coach is because of how well written his book was and how good his psychological teachings are. His book is the only book I've found, and I've read Trading in the Zone, I've read One Good Trade, I've read The Best Loser Wins, you name it, I've read it. I've read a lot of trading psychology books. And in The Mental Game of Trading, he doesn't just offer your typical psychological solutions, he offers real-time solutions to bettering your trading and improving your psychology. He also embraces the mindset, like I do, that psychology is not the most important thing. Your system is, your skill is, and you build solid trading psychology off good skill. So where does the inchworm come in? Here's where it does. We use the inchworm to map our strengths and our weaknesses. So think of your trading as an inchworm. When an inchworm moves, what does it have to do? It has to move its butt up and push it forward to move forward. If the inchworm doesn't move its butt up, it goes nowhere. Well, the same thing applies to your trading. If you don't improve your bad and your weaknesses, your strengths won't do anything. They won't move you forward. So as a rule of thumb, we want to take a moment. I like to do this at least once a month. and write down my C game. Let's say you're struggling with patience and you're struggling with entries. You put that in your C. Let's say you're doing okay with your discipline and with your position sizing. All right, you're doing okay with that. You put it in your B game. And your A game is you are so disciplined in holding your trades, okay? You're so disciplined in holding them. When you get in the right trades, you hold them, and that's a strength of yours. Well, you look at this and you're like, I might be great at holding them, okay? I might be okay at a few things, but my entries are so bad that I'm never making money. Well, if you can improve your entries and move those to a B, there's a good chance that if you put more focus into those, you're gonna make more money. Or maybe lose less money, which in turn, over time, will help you make more money. And we do this once a month and we apply the progress we made, where we're at, and eventually you're gonna notice your C's going to B's, your B's going to A's, and your A's staying strong. I can't stress enough to you guys how important it is to be accountable. Your trading is your business. And as a business owner, you have to know your numbers, you have to know your strengths, and you have to know your weaknesses. Now with that, you have everything that you need to know as far as position sizing, as far as psychology, as far as risk management, and as far as expectations to build a small account. Now what I'm about to give you is my strategy. I want to break down the trades today that made me over $2,000 that could have been executed with a less than $5,000 account. And then in the coming slides, I want to go over some trades from this week, some trades from a month ago that were incredible trades that I think you can learn a lot from. And then I want to go over a few tips on how to capitalize on trend days and to capture trend days, and also how I use key market points to execute and get paid on my trading strategy. So I took 2 trades today. On the first trade, I caught part of this move down after this initial drop. We'll go over that in a moment. But my second trade is one that I called before it happened in real time inside Team Bull. Now, as you can see here, I told the team that I was going to look for a 550 to 551 area bounce for calls. And as you can see, we come down to 550 to 551, and we have a nuclear move back up. That is no coincidence. That is mapping levels, having a proper system for mapping levels, and execution. So I'd like to actually go over that one first and then go over how I cut part of this trend move down for my $2,400 day with minimal risk on the table. Now we look at this 550 to 551 area. This is where we saw our arguably most aggressive move in the shortest time span of the day. Now I found that level from the daily chart. Now, important to note, yes, we had an aggressive move down today. And that is why I also told Team Bull after the fact that for educational purposes, the only time it's okay to trade counter trend is key daily levels, and when we do, we scalp and keep our risk tighter. No one who took this bounce should be read. At this time, 20 to 40% for all. Cheers. This ended up going over 100%. Now, how I found this level. You see here on our daily chart, we had 550 area as resistance, also a whole psych number. We had a touch here, move down. Touch here, move down, with an aggressive move back up and no retests. So when you have a key daily level like that with multiple touches of resistance turn support or support turn resistance, there's a very high probability that when you get to that level, you're going to see at least some sort of bounce, some sort of relief bounce. So I don't care what the trend is. If we get to those key daily levels, I'm always going to put managed risk on. And that's exactly what we did today. And we go back to this 5-minute chart, and you can clearly see that when we get down to this level, we touch down, move up, fail this first time, touch down, and finally get that aggressive move. And that's where it's so important that, guys, that you manage your risk. And when you say, have this move down, if you enter right here and you go back up, you keep your stop below that previous 5-minute low, or if you have a little more risk on the table, a 5-minute close below that low. And if you can do that and use smaller size with a little wider stop and milk those winners, that is how you become profitable. Now on the trade on the upside, or excuse me, on the downside up here, right, I got in right here on this candle. Now, did I miss an entry up here? Yes. Did I miss the entry up here after failing to go higher? With managed risk, we could have entered around this 559 previous area of confluence with a stop above like 559.6. Yes. We came up, right, moved up on lower volume. That's red flag number 1. Had an aggressive sell candle back down. So when I enter here, I have a stop loss above like 557.7, right? With an entry right around this like 556.7-ish area, like $1-ish worth of risk. And we get this nice aggressive move down, right? And these premiums explode on this move down. Now, I'm not here to brag about entries. I could care less about that. What I am here to brag about is that every trade that I take, I define my risk beforehand. So if you can take 5 trades, where let's say on trade 1, right here at 556.8 or 556.7, you get stopped out for $1. Trade 2, you get stopped out for $1. But on trade 3, if you take this and ride this down $3 or $4, whatever it may be, you just made back all of your losses times 2. And that's how I want you looking at your trading, is from a risk management perspective. Whenever you find a lower high or a higher low, I don't like to trade breakouts. That's not my trading style. I trade lower highs, higher lows, and retests inside impulse candles, similar to ICT. I don't watch ICT. I watch Jay Dunn and Team Bull Trading. That is how I trade. So I look for a solid risk reward. I look for high probabilities, and I follow my system to a T. And with that said, I have a few other slideshow examples of my strategy that I think will help you a lot. I have all my rules and execution written down on there. And these were all trades that made myself money. And even better than that, helped my system improve and helped me improve as a trader. Now, this trade from July 17th was also a very not only good and profitable trade, but a very educational one. There's 2 parts to this, which I actually want to start on the bottom here. What do we notice about pre-market of July 17th? And why is this important? We noticed that we had an aggressive move down pre-market. Now, we always want to know what the trend was pre-market, because a lot of times we'll continue to follow that trend intraday. Not all the time, but a good amount of time. So we knew that pre-market we had a pretty big gap down from like 563 down to like 558. So we look at the price action here. When we moved back up and failed this move higher, we had this aggressive sell and a second aggressive sell. We failed this area in here. So what I saw to take puts right here was, for one, Grizzly called this out live in Team Bull, and through my own confidence and conviction, I look at this, know that if I enter here on 559.7, I can have a stop above high a day at 560.5. We have around 70 to 80 cents of risk, meaning we want to see like $1, $1.20, $1.40 move down, and that's exactly what we get. It's only 2R to 2.5R, but still over time with a high win rate and solid risk management, that will make me profitable if I can continually execute that trade how I know that I'm supposed to. Biggest part of this is, again, we identify the trend failure, we identify our entry area, we identify our risk parameters, we locate our entry point, and then we execute our trade and stick to the plan. That is the key. Another trade that made me a few $1,000s back on June 20th. We notice here that we're moving up on low volume. We set a swing high, and this becomes our area of focus for risk reward. We're moving up on low volume. We notice these big candlesticks with low volume. Something's wrong there. We call that an anomaly. Okay, we come down, set an impulse candle here. We come and retest this. This is a high probability area on this retest of this impulse candle that we can locate an entry point, define our risk parameters, ride this back down with a stop loss above this previous high of day. This gave us an only 50-cent risk, so all we need to make this worth it for us is a move down to low a day. That gives us 2R. Anything below that gives us 3R, 4R, 5R, which gives us the ability to milk those winners. So once you get a good entry like this, you write it down, hopefully trim around 2R, and you set your stops for break even or above, and you ride the rest down. That is part of having a stellar system. You set your stops to break even, you follow your system, and you let it work. You execute your trade, and you stick to the plan. Now, for another good example of capitalizing on the trend, we have June 17th. You notice that we see a huge move up here, but the important part of this is actually in picture 2. We see the huge move up, but early on in the day, this is one of my favorite things to do. You mark out your opening range to the upside and to the downside. You notice we come up, fail. We finally break through the opening range with an impulse candle on the 5-minute. A lot of times, when you break through the opening range with an impulse candle on the 5-minute chart, and you come down and retest that, that is a good spot to try calls, or if it's flipped, puts. You try calls here with a stop below low of day. That's exactly what we see happen here. You try the calls here lighter, you have a stop below low a day, and if you enter that, you capture a $6+ move to the upside. Now, you can simply locate this by having your 5-minute chart up, watching for a solid break above and holding of opening range, obviously knowing the macro trend is important too. Trying calls on that retest back down, and then having your stop below low of day. Granted, it's not like a $2 or $3 move. If it's like 50 cents, 75 cents, so be it. Holding that and letting it cook for you. Trimming accordingly is obviously important too. You identify the trend, you define your risk and entry spot, you size accordingly, and then finally, you execute. And that's it. If you can do those 4 things, you are going to be in really good shape in the long term. And finally, this is a really important one too. First, we identify what is our pre-market high and what is our pre-market low. We noticed on this particular trade that we come down, and after we've acknowledged our key levels, we see that we had an impulse candle through our pre-market low right there. We move down, we come and retest this on the 5-minute chart, and this gives us an opportunity, some of you call it a fair value gap, to enter with stops above this impulse candle area. So this presents us with 50 cents or so of risk, meaning we want at least $1 move down. Now, if you can consistently do that and hold that winner, you're going to be in very good shape. As long as you can have above a 50% win rate, even with that RR, you're going to be profitable. You move that to 3R, you have above like a 33% win rate, you are profitable. And that's how I want you guys looking at things. Acknowledging key levels, defining risk reward, planning each trade, and executing that mother effer. All right? That is what I want you guys doing. That is how I want you guys trading. And if you can do that and manage your risk, you're going to be in a very good spot to make and keep money. Now, a few key takeaways before I give you guys some homework after this video. 1, risk management is essential in trading. You live to trade another day. 2, stick to your trading strategy religiously. Avoid revenge trading at all costs. 3, overtrading, too high of position sizing, and revenge trading kills 99.9% of traders. If you find yourself doing any of these, recognize it and work to create better habits. 4, trading is not a get-rich-quick scheme. This is a highly skilled, highly competitive workplace that only the adaptable and dedicated will survive. Master your mind, master your life. Routine is key. It plays into discipline. Routines are essential for success as a day trader, and building a small account is similar to a snowball. The roll is slow at first, but with momentum and size, you will build quickly. It just takes time. And for those of you who have made it, congratulations. You are one step closer to building your small account and becoming a profitable trader. Now for some homework. Number 1, I want you to map your inchworm out and become accountable for your strengths and your weaknesses. This is the key to becoming profitable. You have to stay accountable and keep growing. 2, I want you to map your mental before each trading day. I want you to go into the trading day with an A+ mindset, and if you're not there, you don't trade. Acknowledge if you're anxious, if you're feeling impulsive, if you're feeling euphoric, whatever it may be. I need you guys aware of how you're feeling and going into the trading day, A+. 3, build your scaling plan and sizing plan today. If you've been struggling with emotions, size down. If you haven't been struggling, keep your same size and evaluate at the start of the month if you're ready to size up. And 4, write down your 3-month plan and goals. Not money. I want you to write down consistency goals. And finally, I love teaching you guys right here on YouTube for free. I have so many solid resources. I trade live nearly every single day. However, if you're looking for mentorship, if you're looking for 1v1 attention from myself and the team, head on over to teambull.com or go in the description. You can fill out the wait list. We take 100 students per class. 100 students because we provide 1v1, and we want our students to have a more small class feeling environment and to get the support and help that they need. So if that's you, you're looking to level up, that could be an option for you. Otherwise, thank you for being here. Hit that subscribe button and let's learn and level up together. See you next time.